Barks Alpha here, reporting for Newshound from the Matterhorn with your 24-hour crypto news roundup. On today's bulletin, solo miner hits Bitcoin lottery. Terraform Labs accuses Jane Street. Arizona closes in on state reserve. SEC appoints former Chainlink lawman. And White House shuts door on Bankman-Fried's pardon. Let's dig. A lone miner has successfully mined a Bitcoin block, securing a total reward of 3.128 BTC valued at around $197,546 at the time. This rare event occurred despite the network's difficulty reaching record highs, which usually requires warehouses of computers to compete effectively. The miner managed to overcome odds of roughly 1 in 8,000, which garnered the standard 3.125 BTC newly minted for finding the block plus additional fees. By mining solo, this individual captured the entire prize instead of a fraction, proving that decentralized participants can still win big by contributing to the network. This victory highlights the unpredictable nature of Bitcoin's security system, where every individual guess has a mathematical chance, however small, of hitting the jackpot. In other news, Terraform Labs administrator Todd Snyder has filed a major lawsuit against Jane Street and co-founder Robert Granieri for alleged insider trading. The complaint claims the firm used a private chat group to funnel confidential data from a former intern. These leaks allegedly allowed the trading giant to front-run the market during the $40 billion Terra collapse in May 2022. Through the exploit of information, the firm reportedly secured massive profits while ordinary investors face total losses. The suit focuses on a 10-minute window where Jane Street dumped 85 million UST immediately after an unannounced 150 million withdrawal by Terraform. This swap is accused of triggering the panic that destroyed the stablecoin's value. While Jane Street calls the claims baseless, blaming the fraud of founder Do Kwon, who received a 15-year prison sentence last December, Snyder is pursuing damages. This battle follows a separate $4 billion claim against Jump Trading as the estate seeks accountability for the crash. Meanwhile, Arizona moved closer to establishing a digital asset reserve after the Senate Finance Committee approved a landmark bill. Senate Bill 1649, which passed with a 4-2 vote, authorizes the state treasurer to hold, manage, and invest digital property, including that seized by law enforcement or surrendered to the state. The legislation explicitly identifies eligible assets including Bitcoin and XRP, as well as stablecoins and other decentralized tokens. To ensure security, the bill mandates the use of qualified custodians and regulated exchange-traded products. While the bill must still navigate the full legislature, its progress signals a significant shift towards state-level institutionalization of digital assets. Speaking of U.S. legislation, the Securities and Exchange Commission has appointed Taylor Linman, former Deputy General Counsel at Chainlink Labs, to its newly formed crypto task force. Linman, who spent 5 years navigating the legal complexities of the industry's leading Oracle network, will serve as a senior advisor on digital asset policy and market structure. This move signals a strategic shift under Commissioner Hester Pierce, aiming for a more collaborative approach with the industry following the departure of Gary Gensler. By recruiting a veteran with deep technical knowledge of smart contracts and decentralized finance, the agency seeks to establish clearer, more practical regulatory frameworks for tokenized assets. Last up, and the White House has confirmed that President Donald Trump has no plans to pardon Sam Bankman-Fried, the founder of the collapsed FTX exchange. Despite the claims of an unfair trial, administration officials reiterated that the president will not intervene in the case. Bankman-Fried is currently serving a 25-year prison sentence following his 2023 conviction on 7 counts of fraud and conspiracy. The statement emphasized that the severity of the $8 billion collapse, which devastated millions of global investors, requires full legal accountability without political interference. For the broader digital asset sector, this decision reinforces a clear message. While the current government is becoming more pro-crypto, high-profile financial crimes will still face the full force of the law. That's it for today, dogs. Remember to share with the pack. Keep your noses to the ground and your ears pricked so you never miss a beat. Reporting for Newshound, this is Barks Alpha. Yes, I do.